My mantra of investing is 15 good uncorrelated return streams, risk balanced. Okay, so I want to start there, right? Okay, because I know that if I can pick good investments and they're uncorrelated investment, I won't lower my return because I'll have the average of those returns, but I will lower my risk by up to 80%. So my mantra is, what I don't know, what the risks are always out there. So that's when you first ask me a question, I think in that way. You have to and risk balance them. It's not necessarily dollar balance.
Sure, and it's not just these. It's this combination, this basket, the all-weather portfolio that you are well known for.
So now if I step back from that and I think about, the world now, so that's almost like 7.5% in things that are uncorrelated. There are some general themes, okay? My general theme would be, first of all, that we have a debt issue. Okay, and when I take that debt issue, most fundamental of all markets and the underpinning of every market is the treasury market. It affects everything. So in answer to your question, you have to start with the treasury market. And there's a supply-demand issue there in terms of this. And I've seen this before. One man's debts are another man's assets. When we talk about currency as a storehold of wealth, we're really talking, is debt a storehold of wealth? So when I look at that issue, I think we have a big issue that's there. It's a big risk. So as I start to make tactical deviations from, let's say, what is a totally balanced, assuming I don't know exactly what's going to happen. My biggest, most important deviation is I don't want to hold much debt as an asset. And I think the Japanese example is such a good example. It steals money quietly. And the way it does that is people make the mistake of paying too much attention to their nominal returns rather than their real returns, how inflation eats away at that. So when I look at Japan, what they did on average over the last 15 years or so is they have a 3% lower interest rate than we had in the United States, and they depreciated the currency by about 4% a year. So you're losing 7% a year in the value. It's depreciated holders of those bonds because of the monetization and all of that. I think that there's a significant risk that will happen to us. So when I think about that balance, I think, now I don't want to concentrate any one bet on anything, but as I'm thinking about the bet, my biggest concern is that concern. Then when I get to individual stocks or anything, what are the risk premiums? What should I pay to be out of that?
Which is why debt and the treasury yields are important. That's where you're basing that.
That's right. And then so I think that there's a risk there. If you had normal times and you say, well, what is the inflation rate? And then give me what the bond rate should be. I would sort of say inflation currently is in the 2.5–3% vicinity. You should have a 2% real rate. So you come out in the 5-ish vicinity without the supply-demand consideration. For those reasons, I'm concerned about rates. And I think people also pay a lot of attention to, is the Fed easing? And they think, rates will go down because of that.
Not exactly.
I've watched them go in two different directions for good reasons. Okay, so that's how I look at the treasury market. Okay.
Well, back to that real quick. Are you watching treasury yields rise because you think this debt deficit situation is becoming way too big of a problem? And if any of these policies go through that the Trump administration is promising, we're talking about several more $1 trillion of debt.
Yes, you have to sell it.
Right. Someone's got to want it.
Okay. The traditional buyers have been burnt in it and own too much. In other words, about 1/3 of all the debt is owned by foreigners, and they're owning it, and it's big parts of their portfolio. Sure. They've lost money in it. And besides losing money in it, issues like sanctions. Okay, think about the Chinese. Did the Chinese want the bonds?
Yeah, why would they buy our bonds if we're not buying their chips?
Japanese have had this problem, and so the portfolio is bigger. And then we've got not only the supply that is coming, a supply-demand. So do they want to increase their market share? I don't think so in terms of the share of their portfolio. And then you put on that, that's just the new supply-demand. The real issue, even beyond that new supply and demand, is if people think that that's not a good investment, you will get selling of existing debt. And if you sell existing debt and all of that debt, you can have a real disaster in the treasury market. And so that would force the central bank in. What does the central bank do? They buy the debt, they print the money, and so on. And so that scenario exists as a realistic worry. So when I look at the markets, I say 15 good uncorrelated, but what would I want to have a tactical deviation from? I'm not really excited about the debt. Okay. Right. Then when I look at equities, I think I have to look at the specific equities. The idea of talking about equity markets as a whole is an obsolete idea because they're so different. And, we're now in an era of disruption. So what disruption means is bad for one, good for another, and so on, and how that's going to change. Of course, the hyperscalers and so on done well. I believe that really it's the most greatest advantages are going to be on those who use it well.
Right.
And we're not paying enough attention to that. We're thinking, okay, did they make the chips? Did they make that? Okay. But the users, because they're in a war that's going to be a very expensive war. It's a war that's so important to them that they don't. There's not a question of whether there's a return on investment.
Right.
You have to win.
You have to win
Okay.
market share making chips.
Or give that up.
And you see the bifurcation in the chip stocks that are doing well and the ones that are not doing well.
Right. And you're seeing that also, which is interesting, is it's a national survival question. So what it means is it's more important than profits. It's more important than money. Okay. Which country? The country that has the best technology not only will have the best economics, but they're going to have the best military, the most. So these things are a war where profits can be a secondary consideration. But those that are benefiting from the technology and making transformations, like I think in investing, like I'm super excited because all of the times that my investing was, I would always write down my principles, my decision rules, convert them into algorithms, and I used expert systems to be able to build systems that would make decisions, computerized systems. I believe in that. Now, I'm very excited about what AI does in being able to do that. So I think that, and that's just only one area, but it exists in healthcare, exists in so many different areas. So finding those that are the beneficiaries versus those that are the detractors, the ones who are losing, but also getting away from really the superscalers and focusing on that, I think is important. I think location is very important. When I mean location, three basic things. When I look at countries, I look at companies the same way. Do you earn more than you spend? Do you have a good balance sheet? Do you have more assets than your liabilities? So are you financially good as a country? Good income statement, good balance sheet, because you're going to need that. Internal order. Is there a internal order that lends itself to productivity and so on, rather than fighting, including rich-poor fighting? Does capitalism exist in this environment, or is it going to be threatened? And number three is, are you in risk of an international war? It's so much better to be not in the war
Right.
than to be in the war, because history has shown, there's the war. There are the winners, there are losers, and there are neutral countries. The winners lose. They get deeper into debt and they have their losses. The losers are devastated. The neutral countries are the ones who are the real winners. So if you can have those financials so that you have that, if you can have property rights protections and working well together, and you don't have that international war. So when I'm looking around the world for my 15 good uncorrelated return streams, these are the things that I think about.
Right. Does crypto have a place in any of those today?
Yes. Well, I have a small percentage of my portfolio in crypto because what we're really thinking about is we have to think about what is the alternative money. Because a currency, is a medium of exchange. They will always be a medium of exchange, but it's a storehold of wealth. And so when you're talking about the bonds, the debt, okay, we have to think about an alternative money. And when we look at the United States and we look at other countries' currencies, they're all having problems, okay? So the same problems we're talking about in the United States are the same types of problems Europe has, same types of issues that China has. Am I going to own their debt safely and so on? And the same types of problem Japan has. So you tend to see them go up and down together. So you have to think about money. Money is, can I move it around? It's not like real estate that's knocked down and,
Right.
nailed down, and then you also have it to taxes. So you're dealing with gold, and then you're dealing with the new version, which is crypto. Okay, so you have to think about that. I prefer gold. Okay, but that doesn't mean I'm into diversification. And so the reason I prefer, well, the reason I'm concerned about crypto is, first of all, privacy. The government knows exactly what you've got, where it is, and it's also an effective way of taxing it. Because I was with central bankers when interest rates hit zero, a bunch of central bankers, and we're figuring out how negative can you make interest rates. The thing that limited the negative amount of interest rates was the paper. And so the answer to the question was, we can, for a very short period of time, have negative 400 basis points because of the fact that there's not enough storage space for all the paper. But they'll build storage space for the paper and so on.
That sounds so 19th century.
But okay, now if you don't have the paper and you have it digitally, you can have as negative. It's just the same as taxes.
Right.
So when I'm looking at that, I think, okay, that is not exempt from crypto. Okay, and then the reliability of crypto in terms of, let's say, saying, does it correlate with inflation? Does it correlate with those things? No, it doesn't really, not well. It's still largely a speculative vehicle. So for those, and number four is also, it's not likely to be a reserve for a currency. Okay, it won't work. Whereas now, as countries need things, what is the reserve? Gold is still, it's the third largest reserve currency, the US dollar, the euro, gold, and then Japanese yen. So I prefer gold, but anyway, whatever vehicle we're talking about, I think I'm saying, you have to think about debt as being, maybe you don't want one man's debts or another man's assets. You may not want the bonds. You do have to think of an alternative currency that's going to also allow your buying power. And a currency is something that can go from one country to another. And so there aren't many.